The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the show like we usually do with the DAX. As you can see, we're making a 50% retracement on the daily pattern. There's also a small ABCD that is present at that time. If we take a look at the FTSE, which is the London market, you'll notice that it's a little different because it's making a 61% retracement of the high that we made back a few months ago. So this is going to be very, very interesting here in the DAX, because you remember in the DAX that D point that we had up there at the 1.618 expansion that came in at 7,790, which was the exact high. That was a 3-drive pattern and a very large ABCD on the daily. So this is a retracement pattern that really deserves your attention if you trade the FTSE, because it should be at a pretty good level for some type of resistance. That's the way it looks like for me. Now, folks, tonight I'm going to be hosting Jim Bartolioni as my guest for a webinar for TFNN on taking the ABC structure to a little bit higher level. And I'm just going to post a couple of the charts. There's well over 60 slides that he's going to be talking about. And what he's going to be talking about is showing the relationship between mathematics, music, and astronomy, and how it all fits together with the markets. We'll just take a look at this slide that I really like, because it's related to Pythagoras and also some things about the mystical parts of religion and stuff like that. But I just want to show you that you don't have to know what these ratios are. This is just very informative. You're going to enjoy it very, very much. But if you'll look at the left-hand side over there, showing you the geometric structure of a circle and an ellipse, what we're going to do, he's going to take this to a little bit larger level, because it really doesn't mean very much unless you can put it together in a situation where you can actually relate it to some of the markets that we like to see. And that's the whole key to this. And if you'll see what he does in the next slide, is he takes that same type of pattern and ratio and he puts it up to show you how the origin of square roots come together. And he relates it to the soybean market, and he relates it to Stephen Wynn Stock Win International. So that's the kind of thing that you're going to be seeing. I met Jim well over 20 years ago. He was just retired from the Navy. He was an F-14 Tomcat pilot. I trained him, and right after that, there were 4 of them in the group. I trained Bucky. And then I trained Jeff, and then I finally trained the Top Gun leader, which was John, and his handle was Rooster. I trained all 4 of them. Rooster now works for NSA. The other 3 are still trading actively. Bucky has a real interesting story, folks, because he was from Florida, and he had retired just about a year after Bart did, and he was trading and doing pretty well, making a nice living, and Boeing Airlines came to him and said they had an opportunity for him in Kuwait. And his wife said, "Are you kidding me? There's no way I'm going to Kuwait." Well, they made him an offer he couldn't refuse, a 2-year contract at a very, very large salary. I think it was $350 a year. But when they got there, they had 2 small children. They were like 4 and 5. And when they got there, they go to the expat compound there, and it's just absolutely something out of The Rich and Famous. Incredible. Everything is just so incredible. They have their own chauffeur. They have their own cook. They have their own maid. Whenever she wanted to shop, they flew her to Paris. I mean, they had vacations, everything. And so they had a 2-year contract for that. When it came up, she said, "I'm not leaving." And they're still there. He's been there for over 15 years now. He trades the Royal Air Force in Kuwait with the Boeing with the Boeing airplanes. I don't think they're Tomcats, but they're very similar to that. But that's what he does. And so anyway, it's very interesting, you know, how life evolves with some of these things. But if you get a chance today, listen to this program, this webinar, because you're going to really enjoy it. It's got a lot of Pythagoras. It's got a lot of Aristotle. It's got just a whole lot of stuff. It's got some great stuff from Mark Douglas, and it's really it's going to be very interesting. And not only that, but he's a super nice guy. He went to Annapolis, of course, and my father's youngest brother went to Annapolis, and one of our relatives got married there 20 years ago. Well, about 18 years ago, we went there as a family to Annapolis, and Bart met us there and gave us a tour of everything, and so it's really a lot of fun. Okay, let's move on to these markets here. We want to talk a little bit about some of these stocks that used to be great are not great anymore. Let's take a first look here at JCPenney. Now, I'm going to bring this to your attention, not just the fact that it's gone from, you know, $87 down to $2.91. That's not the important thing. The important thing is that sometime in your investments, you got to say, you know, you got to scream uncle if you're holding stocks, because, you know, once this stock went below $15 a share, you know, it really had no friends, and, you know, it's dropped you know, a lot, 80% from that level. So you've got to put a spot where you're going to say, hey, look, I just can't take the heat anymore, and, you know, just get out of it. This was one of the great companies, James Cash Penney. I mean, give me a break. And then we have another one, which is even in worse shape, and that is the great company Sears. Well, it's actually trading a little bit higher than JCPenney. I stand corrected on that. You'll notice here we've got Sears trading at $3.24 when it used to trade at $99.76. Now, that's what we call a sell-off, boys and girls. Now, someplace along here, you should have said, look, I just can't take it anymore. And that area would have been right around $23 a share, because once we broke that, that was done in 2014. And remember, this is happening where we're in the biggest bull market in the history of the stock market. Are you kidding me? I mean, you know, it tops in 2009, you know, with the rest of the market, of course, but, you know, it just keeps going down for the next 8 years. So, you know, this is why technical analysis can be a little bit helpful, because, you know, you say, well, I don't know too much about trends, but there's got to be a spot somewhere in here where you got to call uncle. One of my doctors here many years ago was in Enron, and he was part of the Portland Cement family that Enron bought, and they took Enron stock. And when the stock went below 50, he was very concerned. And I said, look, if this gets much below, you know, $46 a share, I said, it's probably not going to make it. And he wrote it all the way down. And, you know, it took it to zero. I mean, there's no reason for that. You got to say sometime, you know, we got to stop, you know, you got to stop the bleeding. There's no mistake in being wrong. The mistake is in staying wrong. And that's what Roy Longstreet teaches in his book, The Viewpoints of a Commodity Trader. So just remember, you can't control how much you're going to make, but you can certainly control how much you're going to risk. So, you know, you got to put a stop in there somewhere on these things, because you just don't want to give it all up, because there's many, many opportunities out there. You could even have bought some Bitcoin down there. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we talked a little bit about, protecting yourself when things fall out of the sky, when you're long. Also, let's take a quick look here at the Japanese yen versus the U.S. dollar. This is one of the major cross rates. As you can see, yesterday we had this beautiful pattern right up at the 61% retracement at that 108.15 level. You can see what happened. It just exploded through there, very quickly, and now we're approaching the 78% level up here at the 109 level. Now here again, we're not even sure if that's going to hold it, are we? The key to remembering here is you've got a beautiful pattern that is completing exactly as you'd like to see it at that 108.25. And if you did that trade, there's nothing wrong with that. But the key is you put a 30 or 40 pip stop on this $300, $400 stop, because you would have been out of it in a matter of maybe 10 minutes. And then it continues to go on up. Now, someone's asked the question, why don't you reverse during some of those things? Some people do, because if it goes beyond the 61% retracement, the odds are very heavily favored that it's going to go up to the 78% level. Not only that, but you have something really working very heavily in your favor on that trade, and that is the trend is on the short-term basis over the last 6 weeks has certainly been strongly to the upside. So buying that breakout above that loss that you would have taken at that 108.50 level, you would have made all your money back plus some. So the $64 question is whether we're going to stop here at this 109 level. This will be something that we'll keep in mind for tomorrow, just to see if the pattern actually holds up at this level, because if it doesn't, it's going to go a great deal higher. So this is a key thing to watch here in the Japanese yen as we're looking at the prices this morning. Now, the next thing I wanted to do, we've had a question about Bitcoin. I'll bring it up here to show you, because Bitcoin has held some pretty good support down here just recently. When we got down to that $6,000 level, we rallied up to 12,000, pulled back to 6,500, and now we're trading pretty close to 9,000 this morning, around 8,900. So it's still got a pretty good chance in here, but any move below 6,500 in the Bitcoin would most probably take it down to that very large ABCD pattern that is down there at $4,000 a share. Boy, you say those numbers, it just doesn't even seem possible. Anyway, that's what it looks like, for Bitcoin. We'll watch it. Now, hold on one second, please. Okay, we've got a question about the crude oil from Mr. Z in the room here. Let's just switch over to this and take a look at it. Let me get it up here. Excuse me, folks. Let me give it up here for just a second here. I want to get this up here to take a quick look at it. Here's the crude oil that we were looking at for the, to come up here around the $70 a barrel level. We broke $2.20 a barrel. After we hit that level, we got down to, I believe, the 66.90 level. And if you looked at that yesterday, 67 and change, excuse me, I think 67.14, that was nothing more than a 61% retracement of the previous low yesterday. And then it just took off and just kept running to the upside. That's a very, very bullish sign. So it appears that, we could easily get up to test this $70 level. Now, this is my personal opinion now. And believe me, opinions, they're like armpits. Everybody has one, and it usually smells. So just be careful here, because 70 is a monster ABCD pattern. And if you look at it on the weekly chart, I believe that 70 comes in very close to the 50% retracement of the high we made back in that 108 per barrel level. That was after we hit 141 several years ago. We rallied back, and then from that 106 we went all the way down to $30 a barrel. So I believe that we're up into that area. It's also nearly double the price of our low down there. So 70 should have some type of resistance. But the only thing that would really mean anything is if we took out yesterday's low, which was at 67.14 a barrel, because if it breaks that one, that would be the 61% retracement, and that would tell us that's where we are, at that particular point. Now, I've had a question about, market volatility and, trading short-term patterns and stuff like that, which, if you have the energy and stuff, short-term patterns are fine. But the question was, what caused the market to rally? I don't really know, but I can look at the pattern. And if you take a look here at the Dow Jones yesterday, this is the Dow Jones E-mini, when it was making its bottom 1 hour before the close, you notice that it was making a perfect butterfly pattern. It was exactly at the 1.27 of the low that we made on Sunday night. It was also a perfect 1.618 expansion from the early range from Monday into the Monday opening. And so you had that beautiful ABCD butterfly, and of course it rallied, and it went above the prices up here. We got all the way up to 24,600. So that tells you that it's had a pretty good rally, over 300 points in just a matter of a few hours. So that happens, folks, because the markets get oversold, and when short covering comes in, the shorts, remember what happened during the month of January, the whole month up until the 29th, the market was screaming to the upside, and so they start to cover, and then we'll see what happens, from that level. So that's what we're really looking at. And if you do short-term patterns, I don't recommend anything smaller than two minutes. It's just absolutely the very, very smallest one you can look at. It's better to use 15 minutes because it's a lot easier, to see that. Let's just show you on a 60-minute chart yesterday. Hold on just a minute, boys and girls. They're alerting me that something is going on in the market. My beepers are going off, and that is that the Japanese yen is getting up to that 109 level that we were supposed to look at. That's right there now, 109.10. So we'll keep an eye on that one to see, what happens. Oh, excuse me, folks, to see what happens with that. Let's move on to this Nasdaq that I wanted to cover, because this is where we were yesterday after we had the rally in the morning. You notice that we went up and we made a perfect 382 retracement and then came down. Folks, we went all the way down to 66.10. That was a 1.27 of the whole range between the 22nd and the 23rd. And from that level, we rallied over 100 Nasdaq points in just a matter of several hours. So that there's a main thing that we're looking at. Someone's asked me to take a look at the wheat market. Just 1 second here, Mike. I will certainly try to do that, but we've got a break coming up. So what I'm going to do, Mike, is I will do the wheat after the break, so we'll be able to take a look at it. But it's getting down to some pretty good support now. Mike, as I recall, you're from Toronto. I hope things are getting a little better than they were yesterday up there. That was a terrible tragedy that you folks had to go through. So we'll see. Hopefully that'll work it out. Anyway, we're going to take a little break. This is the other Mike. Sorry. Okay, that's the one from Florida. All right, let's move on here. We got a break to come up and pay some bills. By the way, we have Norm Winsky will be our guest tomorrow for TFNN. He's got some really good things astrologically. 877-927-6648.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were asked about the wheat market. I put up the Christmas wheat. This comes from our 24/7 futures letter that we do each week, and you notice that we've been waiting for the market to get down to the 510 a bushel level. We're trading around 512 this morning. That's down another 6 or 7 cents from what we're looking for it to come to this area. So we're almost at the exact level, which makes that a Gartley pattern. We're certainly in an uptrend because we have higher bottoms and higher tops. So there should be playing, should be getting really close to a really good spot. Now, I don't do the wheat ETF. That's I didn't even know they had one. Well, I guess they have an ETF for everything. So I imagine it follows the wheat, but I would be watching to be a buyer of that, Mike, because this is a Gartley pattern. And as Gartley said, buy the first ABCD pattern in a new bull market, and this would be your first one. So it would be very interesting here to see if it holds. We'll follow through with it, but I believe the price comes in at 510 a bushel. I think we're trading around 512 a bushel right now. So the risk there would only be about 6 cents or $300 because you have to put a stop in somewhere. And if you're going to be a farmer, you don't have to buy the land or lease anything. All you have to do is buy a contract and you become a farmer. So just remember to keep a stop in because these patterns do fail. And we want to go into one right now that we really need to talk about because I had some really strong interest in this the other day. This is a futures contract. And in fact, we have our good friend Simon Lee is very heavily involved in this, and he's been hedging. But if you'll take a look here at this sugar chart, folks, I want you to do two things to remember. Look at the far left up there in June when it was trading at 16. That was down from a high at 25. Now, the fundamentals in sugar have been bullish for the last year and a half. And look what's happened to the price of sugar in the last year and a half. Now, the last support in sugar was at that 1.618 level, which was at $12. And when we went through that, you know where we're trading now, folks? We're off the bottom of the page. We're down at $11.24 for a contract to sugar, and I think it trades at $11.20 per pound. So we've gone through that by quite a bit. Now, coffee went below that, and then it took off to the upside, but sugar just kept on dropping. There's another example of, you got to yell uncle somewhere. Just remember, there's no mistake in staying wrong. In being wrong, the mistake is in staying wrong. Amos Hofstadter had a little plaque on his desk that he kept there, and he happened to be a good friend of Roy Longstreet. So that was a very, very important thing because you don't know where markets are going to go, and if you don't use a stop to get out, you're basically telling the market that you know more than they do, and that does not happen. The markets are seldom wrong. Men are often wrong. So just keep in mind that you've got to be able to protect yourself, as you're looking at some of these. Let's just take a quick look at that coffee, and you'll see what happened with that double bottom. And we've had, the fact is, we're trading substantially. We're up around $1.19 a pound now in the coffee. Now, many of these commodities we've talked about before look really good on a long-term basis, and so we're looking for buying patterns in some of these things, but sugar, not yet. You've got to wait for sugar to make some type of an important bottom here, and then you'll be able to see what really happens with some of these things as we go through here. But just remember that things change in these markets very, very quickly, and you don't want to stand in front of it because if you do, you can really get into a whole lot of trouble. Let's switch over and talk a little bit about the gold and the silver. I wanted to bring you up to date on the silver because we hit a really interesting spot here in the silver market. Just back on the 19th, we made that 1.618 expansion at the 78% level at 17.35. We didn't even go above it by a penny. It stopped exactly there, and it was there for 3 hours, believe it or not. And then yesterday's low came in exactly at the 61% retracement of the low that we made back on April the 5th. You'll notice the blue line that is there, which is the gold market, and it is weaker than the silver market because it didn't make a new high. And gold completed that ABCD pattern yesterday at 13.25. The low was 13.24. We're trading around 13.27 right now. It hasn't rallied very much, but hasn't gone any lower. But the ideal situation, if you'd like to buy gold and silver, is if we can get one more big washout down to about 12.85, 12.90 in the gold, and silver maybe even as low as 15.30 or something like that per ounce, down about a buck and a half an ounce from where we are now. That would, what I think would be a really great pattern, because we've got multiple ABCD patterns coming together at that time. But you know, just for general purposes, you know, we did hit that 61% retracement in silver yesterday at the 1660, and so far it has held up. So we'll have to take a look at this. Now, one other thing that is going to be interesting with the thing that we have going on with Jim Bartolone tonight on the mathematics and the stuff of the market, is he goes into some of the history of some of these things, you know, going back to Aristotle, Pythagoras. He talks about John Michel, and a lot of the things in this book called The Secrets of the Universe by Michael Schneider is a great book for doing some of these things, and it really is really quite exciting about looking how some of these patterns and ratios and everything come together in vibration. It's just truly amazing. You know, that's the main thing. So let's try to listen to it, folks, because I think you're going to really, I know you're going to enjoy it, because I've seen it a couple times and I really enjoy it. He first gave this to the Market Technicians Association at their annual meeting in New York, and he really, as they say in the trade, knocked their socks off. So it's a great thing to pay attention to. Now, I wanted to talk something about what we talked about yesterday, and that was the Australian dollar. That we were watching this market in the Australian dollar. I'll get this up here to take a look at it here. There we go. You'll see here that we're right at the we went through that 78% level like it didn't even exist yesterday. We got all the way down to 75.80. We were looking for it to possibly get to around 75.50, and now we're still trading about the same level that we're showing here on the chart this morning, which is 76.12. But I still believe we're heading lower to that 75.50 level. We've got another break coming up here pretty soon, and then we'll go into the U.S. dollar to show you, you know, what's happening with that one. And it's following pretty much as expected, and we'll see what this next leg is going to be, because it doesn't take much here to get this U.S. dollar moving very, very quickly to the upside. One really strong up move, i.e. a down move in the dollar, in the euro, would take this thing, you know, up to a really, really strong spot to look at. So we'll take a little break here. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to talk a little bit about the Treasury bonds right now because, as you can see from this chart that we posted, it's an hourly chart. We had a rallied one handle yesterday after we went down to 142.10. We rallied up to 143.09, and you can see now we're attempting to take out the lows again. This is a very, very bearish price action. As we've mentioned many times, of all the charts that we look at, the bonds and the notes certainly look the most bearish of any of the charts that we look at. So it looks like interest rates are going to go higher. Now, the key point to remember here is this 142 level, because that's equivalent to the 30-year bond going above 3.3, but more importantly, it's the equivalent of the 10-year note, which is the one that's based on interest rates for your automobile, your credit cards, any type of consumer loans. That will go above 3%, which means you're going to be paying more for mortgages and cars and other stuff. So once we clear that 3% level, which would be the bonds going below 142, you could see an acceleration here in interest rates, i.e. even lower prices in both Treasury bonds and Treasury notes. So that's something to watch, but it necessarily might not happen. But you can see how important that number was yesterday, because when we went down there, we immediately held a 3%, and the market, the bonds rallied and rates came down a little bit. But now we're back there again. If we close below that 142 level, that's going to be, a line in the sand that I think folks are going to say, uh-oh, maybe rates are going to go higher here. Now, whether the rhetoric that they're using at the Federal Reserve means anything or not, I don't think so, because I believe that markets follow the trend that has been developed as the fundamentals unfold. And so the news follows the trend, and we're certainly heading lower in Treasury bonds and Treasury notes, which means higher in the interest rates. Now, another one that we wanted to talk about this morning, which is related to that somewhat, is this U.S. dollar index. I wanted to bring this up here to take a look at it. You'll see here that we were expecting the market to come down to roughly the 78% level, which it certainly did last week. And you can see the first 2 days of the week, we've had a pretty strong rally. We've already completed the ABCD structure here. It has already gone up to the 90-85 level, and anything above that 9100 level is going to take it, substantially higher, because this base that we have here, started in January. We had the false breakout in February, and then we had the retest again in March, and now, it's starting to turn. So that's a really important level to be watching here in this dollar index. All I think for sure is if we go below 88 in that U.S. dollar index, the dollar is going to get absolutely trashed, and that will be, that'll be very, very interesting. Now, just because the dollar is trashed, it doesn't bother us too much here in the United States. But if you travel to Asia or Europe or just about anywhere in the world, you're going to have to pay more for everything. But right now, the dollar is strong, and so you get a little bit better rate. The euro's only at 122. 10 years ago, the euro was trading at 160, 164. So these rates can move a lot. And if you're going to do any traveling at all, kind of keep an eye on what you're watching here, because it's really interesting. Also, don't ever buy your money for when you're traveling. Don't ever buy the currencies from the bank that you deal with here. Wait till you get to the airport in the country where you're going to arrive, because the rates are, much better there. With one exception, don't do that in the United States. It's fair every place else, but in the United States, they really tag you pretty heavily. But to see how some of these going to hang out on these rates here. If it's just a really small amount of money, a few $100s, it doesn't make anything. It doesn't make any difference. But you're going to be gone for a couple of weeks or a couple of months. It can make quite a bit of difference, probably as much as $500 to $1,000 just on the conversion rate of the things that you're looking at. Now, I've had a request to take a look at Tesla here. We want to get this up here to take a look at it. This has been in a that's another way to look at it, Danny, is some of the credit cards. American Express does a pretty good job. But if you'll notice here that we have a big ABCD structure here in Tesla that may have been completed already down there at that 1.618 expansion at 230. And then we had a rally. You'll notice the last two rallies that we had during February and March were just about equal perfectly. And that tells us if we possibly have another ABCD structure that could take us down to $215 a share. Now, they're doing a lot of creating accounting with bonds and stuff, so you have to be alert to that. And David White here at TFNN has done a fabulous job explaining what Tesla does with their bonds and things, and I think it's really important that you listen to something like that, because it's really important. By the way, if you're interested in commodities, Andy Heck has a fabulous commodity show at the end of the day here for TFNN that goes through many of the commodities that we're looking at. So we'll see what's going to be happening with some of these things, because it's very interesting, what we're looking at when we see some of these things unfolding. So that's what we're seeing here so far early this morning. So we'll keep an eye on this and see what's going on. So far, all we've done in the Dow Jones is we went down and we touched the exact 78% retracement of the overnight low. That was also a 382 retracement of the low that we made the other day, and we're getting down to that area. That's pretty good. The Treasury bonds are very, very close to yesterday's low. We're only 6 pips away with these really wide-ranging bars. That means rates are spiking, but it's not affecting stocks very much. Not unusual, because that's the way it usually goes. So keep an eye on this, folks, because we got some really interesting things going on in these bonds, because this 3% rate in that 10-year certainly means a lot. And if we take a look at this 10-year note chart, you can see what it's looking at here, because we're ready to break through to the downside here on this. Let's get this chart up so you folks can see it on this weekly chart here, and the support is going to be taken out. And you're going to be looking at the next price objective is 5 handles down. That's equivalent to 10 to 12 handles down in the Treasury bonds, because they're much more volatile, but that's what you'll be looking at. So pay attention. This T-note chart is a perfect head and shoulders pattern. As you can see here, the right shoulder is, way below the left shoulder, which is extremely bearish. And not only that, but it's a weekly chart, and it took well over 3.5 months to make that right shoulder, showing you how bad it was. It was also right at a 20-man line. And, this is where we're saying this is where you probably should get short these things. And they're still working. We think that if you get below 142 today in the Treasury bonds, you probably should add to your position, because the market is accelerating, and you want to try to, get as much out of the market as you possibly can. So, keep an eye on that, because if it does, it could have a tremendous move, taking you to a level that would really be really interesting to watch. So pay sort of attention to it, because it's got a real chance here, to do something like that. Someone's asked a question about the gold. Folks, we want to wait on the gold. That bounced $3 off the possible target down there. That's not a very good sign. Silver made the 618, so just be patient. We've still got a chance here. Maybe the low was yesterday, maybe not, but we want to pay attention to gold on a longer-term basis, because it's going to be interesting. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have a caller from Philadelphia. John, are you there?
Morning, Larry. I wanted to get in a quick question on corn for you, please, before the show wraps. Larry, I just wanted to mention I'm trading the new crop corn futures, D's corn. It's in a bull phase, but it's truly quiet as a mouse. So there's not much profit potential the past couple of weeks or months. But Larry, the the Western Corn Belt has been unseasonably cold this spring, and corn is being delayed in planting, which is no problem now, but I want to be prepared because if the weather turns hot, and usually hot, in early to mid-June out in the Western Corn Belts, this D's corn contract could surge out of nowhere. So I want to be prepared for things. I wanted to ask for your help on the charts and what Cy Monley and Rich Anderson are tracking, so I'd appreciate that.
Well, John, we're looking at Christmas corn here, and it's got very strong support at 404. The risk here is about 10 cents, is my opinion, down around 394, but it's trading right there right now. As you can see, we have several patterns coming together at that point, ratios coming in. We've got higher bottoms, higher tops, so it's in a short-term uptrend, of course. It looks the best of any of the grain markets compared to, wheat's also in a buy mode. We're down at near the 510 level in the wheat. So this is the spot where you have the least amount of risk with the best profit potential. So I'd be buying corn here at that 404 level and, risking about 10 cents on it. I would love to see it be under a full moon or new moon, but that doesn't happen for a while. But we've got some strong astral stuff coming in over the next few days, so it's going to be, pretty interesting because the full moon doesn't come in until another 5 days on the 29th. So that's what I'm looking at in the corn. I hope that helps.
Thanks so much, and we'll look forward to Jim Bartoloneone's webinar tonight.
Oh, you're going to love it, John. Thank you very much, folks. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.